Okay. Top of the morning to you, our esteemed listeners and investors. We bid you good tidings. As we appreciate you once again for your continued audience, we want to welcome you to another edition of our Monday morning breakfast session. I am Akinyemi Omotayo, taking you through the fixed income market. And joining me this morning is Mr. Akolade Taufik, our in-house analyst. Good morning, Mr. Akolade.
Good morning, Mr. Kerry.
Very quickly, I'll be taking you through the happenings in the fixed income market and what we're expecting this week. Okay, without further ado, let's delve right into it. For our money market and treasury bills, we saw the open repo rates and the overnight rates conclude the week at 26.83% and 27.42% respectively. This outcome followed a marginal decline in system liquidity, which ultimately settled at 486.52 billion. The slight moderation in liquidity appears to have had a corresponding impact on interest rates, influencing the closing levels for the week. For the Treasury bills market, the Treasury bills secondary market ended the week on a strong note, driven by robust demand fueled by ample system liquidity. As a result, investors' appetite for short-term securities surged, leading to a notable decline in average yields. Specifically, yields dropped by 30 basis points, ultimately closing at 19.93%. This yield movement underscores the impact of liquidity conditions on the market dynamics and investors' behavior. At the latest Nigerian Treasury bills auction, the Central Bank of Nigeria offered 162.02 billion worth of NTBs, which triggered significant investors' interest, resulting in an oversubscription of 1.07 billion. Despite the high demand, the CBN opted to allot the original amount on offer. The auction outcome saw notable declines in stop rates across all tenors, with the 91-day bill decreasing by 18 basis points and 181-day bills by 15 basis points, and the 364-day bills by 51 basis points. Taking a brief look at the bond market, the FGN bond market ended the week on a positive note, driven by broad-based demand across various maturities. Investors' increased appetite for these securities pushed the market sentiments towards the bullish territory, reflecting confidence in the bond market and potentially signaling a favorable outlook for the asset class. Analyzing the yield curve on a tenor basis revealed significant decline across various segments. Specifically, the short end of the curve, comprising shorter date securities, saw yields decrease by an average of 71 basis points week on week. Meanwhile, the mid to long end of the curve, which includes longer date securities, experienced even more pronounced declines, with yields dropping by an average of 91 basis points. This indicates a notable shift in market sentiments, with investors driving yields lower across the curves. Trading activities over the week was concentrated in specific FGN bond maturities, with the 2008, 2009, 2029, 2033, 2034, 2035, 2036, 2037, 2038, and 2045 bonds being the most actively traded. The benchmark bond saw a notable decrease in yields, with yields decline of 86 basis points recorded over the week. As a result, the yield on the bond settled at 17.54%. For the fixed income market, the Naira witnessed an appreciation in value as we saw a positive 0.52% change in the NAFEM window, closing the week at 1,528 Naira 87 kobo as compared to 1,536 Naira 50 kobo in the previous week. For the forwards, we see rates on a steady increase from 1 month to 1 year forwards. For outlook for the week, funding rates are likely to remain stable at current levels, assuming no major liquidity outflows occur within the system. In the absence of significant external factors disrupting liquidity, market conditions are expected to support the maintenance of existing funding rates. Trading activities in the secondary bills market is anticipated to be quiet ahead of this week's primary market auction. Market participants are likely to adopt a cautious stance, waiting for the auction outcome before making significant moves. And lastly, we expect the bond secondary market to see a surge in activity, driven by stronger demands, leading to a bullish trend. And given the recent announcement of Elon Musk's American party, we encourage our fixed income market investors to keep a close eye on the global economic developments, particularly in the US, as they may impact Nigeria's economy and fixed income markets. we implore you to consider diversifying your portfolio to minimize exposure to potential market volatility. Invest in short-term instruments such as treasury bills, take advantage of liquidity and flexibility. And lastly, consider investing in long-term bonds with attractive yields. These options can be accessed through a wide array of products, ranging from our lead fixed income fund, which focuses primarily on capital preservation and growth. The fixed income fund comes with a low risk profile, and dividends on the fund are paid biannually. It has a lockdown period of 90 days, and it is worthy to note that unit holders of the fund have experienced 100% growth in their investment since inception of the fund. For our clients that intend to balance out their investments, we advise you to subscribe to our lead balance fund. This fund invests 50% in money market instruments and 50% in quality stocks. Because of the equities component embedded in this fund, the risk profile is medium and dividends are distributed annually, giving the client the option of reinvestment or collection. With a lockdown period of 90 days, clients have easy entry and exit into the lead balance fund. For a potential client and investor with intention to place their funds for a specific period of time at a fixed rate, we encourage you to subscribe to our lead Gazelle portfolio with tenors ranging from 90 to 365 days and offering competitive rates that exceed your standard commercial bank deposit rates. For investors that have an intention to hedge against our depreciating naira, we implore you to sign up to our Eurobond trading platform. This platform provides our clients access to invest directly in US dollar debt instruments, earning your returns in form of coupons in the same US dollars, which are being paid biannually, twice a year. It is worthy to note that the minimum investment threshold to subscribe for Eurobond is $200,000. For investors who may not be able to meet the $200 threshold, we're excited to offer you our lead dollar fund. This has a minimum subscription of $1,000 with a minimum holding period of 180 days. Dividends on this product are paid biannually whilst maintaining a very low risk profile. Mr. Akolade, over to you to give us a brief insight on the happenings in the equity market and what we are to expect this year.
Mr. Akinyemi, thank you very much for the deep analysis about the fixed income market and our expectation. Straight to the equities market. Last week, market also witnessed another bullish trend, and that will be the 6th consecutive weeks the equities market will be on a positive trajectory, and then occasioned by investors' strong position taking in some of the tickers that have compelling scorecard. And we could see from the graph displayed on the screen that for the entire last week, we could see Moro taking over Wednesday, Thursday, and Friday. Of course, the Monday and Tuesday, those 2 days were dominated by the profit-taking activities, which is also expected in the market. But week on week, we've noticed that the total gains display the total losses market witnessed in the course of last week. So week on week, market closed on a positive note with 0.85%. So, and then also looking at the graph, we could see that from the distribution from this pie chart, 50% still constitutes activities around financial service industry. And that is to confirm to us that from time to time, we'll continue to emphasize that financial service sector or industry will continue to drive our equities market. If also a publication also came out last week stating top 10 company with the best profit after tax, and then from those 10 companies, they made a total profit of 8.17 trillion for the entire 2024. And we also observed that from those 10 companies, 70% of those 10 companies are banking stock. They are the banks, the likes of GTB, Access Bank, Zenith Bank, Fidelity Bank, Echo Bank, and the like. So from the 8.19 trillion profits being made by top 10 companies, we saw 70% being dominated by the banks, while the likes of Boa Food, the likes of Arade, and then the Seplat, they are also part of that company that also made the profit. That is to tell us that when you see this graph on continuous basis, you are likely to see a financial service sector dominating a larger part of the charts. That's why activities around financial service industry will continue to drive the equities market because the banks are really making money, while they are also giving facilities to other sectors we have in the market. That's why we continue to see companies that are also operating in other sectors display compelling scorecard, making equities market more attractive for both local and international investors. So we could see that in review, we are still at a 120,998.66 basis points. Week on week, market close 0.83%. But if you look at our year-to-date return, we have also moved to 17.55%. And in terms of the trade turnover being witnessed by market last week, we saw that our total trade volume also grew to 5.47 billion, which was higher by the previous transaction we had in the last week by almost 40%. While in terms of the value, we also had 108.110 billion. It was also higher by the previous trade value of 102.22 billion by about almost 3.98%. So as I've said earlier, financial services take further major activities. We saw more position taken in banking and insurance company, and the 2.74 billion worth of share of 2.474 billion shares worth 35.5 billion traded across the banking and financial service industry. And then in terms of contribution, they also contributed 50.12% to the volume, while to the value 31.95%. Oil and gas, we also saw some movement around the oil and gas. We also saw some strong position taking and transaction around the Arad, Seplat and a few other companies like the Arad, the course of last week. So, but if you're looking at the top volume stocks within the last week, we saw that major activities occurred around Royal Exchange, Access Bank, and Japan Gold. And they also accounted for about 1.469 billion. And in terms of value, it also worth 12.82 billion. And they also contributed 30.88% to the volume, and then to the value 11.86%. Looking at market capitalization, it was up by 0.5%. We are now at a 76.34 trillion, while we are still the threshold of 120,000, above 120,000 for the all share index. We are also likely to test around 121,000, maybe probably in the next 2 weeks. But this week, a lot is going to happen between this and next week. But looking at the coverage, the key coverage under the capital, we saw some expansion under NGX banking. We are now seeing people taking more position because all the banks that actually responded to the publication with respect to the forbearance that actually served as a bombshell to the equities market 2 weeks ago, when a lot of people were selling off their stock in banking stock, hoping that they may not get interim dividends for the half year, and then the possibility of getting the final dividend for 2025 is also not certain. But thank God to the response we have also gotten, all the banks that have also clarified that they are going to pay interim dividends. In fact, we've seen publication from the Access Bank, from the Zenith Bank, that they are holding their meeting, they are submitting their account by the 29th of July, and then there is a possibility that they are going to pay interim dividends. That has actually stimulated the market. Insurance company, they don't usually pay interim, but results, a lot of people are also taking position for those insurance companies whose price to book ratio are also lower, and the price to earning ratio are also lower. People also consider some of those tickers as undervalued. The same thing in oil and gas. And then we have also seen some moderation in the global oil price. So we have seen some stability within the equities market. So that's why we have said it that a market is still likely to witness more rally, because all various macroeconomic indicators, they are looking very positive. So we expect a bullish trend to also continue in the market, and then that will also be supported by the half-year results we are also expecting from the banks and the other key sectors within the markets in the couple of weeks now. Some of those things will continue to come into the market, and to also stimulate more buy interest. That's just the overview. In terms of a dividend qualification, so Presco, they are likely to be marked for this for today. Today is going to be the markdown date. I'm not sure people can, if you buy today, you may not be able to qualify because it will be marked before the market opens. But for those who are actually invested in Presco, in our buy recommendation, we are still recommending investors to also buy, because we have seen expansion drive. We have also seen some of the integrations, backward integration, the company has actually invested in to ensure that they mitigate against foreign exchange losses, and that will also serve as a gain for them. FTSE, the window is still open for those who want to invest in the healthcare sector. Bradford, the window is still also open. The qualification date is 21st of August. So these are the three tickers that two out of three tickers that were also pushing forward for those who are also interested in cashing out dividends from all these tickers. So in terms of our liquid capital recommendation, so we sent out 159 stock recommendation this morning. We have also extracted 37 from those 59 recommendation. And then that 59 recommendation, stock recommendation also cover about almost 12 sectors. You could say from the new recommendation, the least capital has also extended coverage to manufacturing and then the healthcare sector and other financial services. So at every point in time, investor can take opportunity of also investing in various sectors for them to be able to diversify their investment, their equity asset across various sectors of the market. So this morning, today, we are recommending 1 to 24 as our buy recommendation. The Access Bank, First Bank, GTB, UPA, United Capital, Zenith Bank, and AICO, NEM Insurance, Asa Marshall Insurance, Boa Cement, CAPL, Dangote Cement, Vitafoam, Cadbury, Guinness, Honey Flour, NASCOM, Mipika, Mikion, Industries, Arades, Seplat, CWG, MTN, Airtel Africa. These 24 stocks were part of our buy recommendation for this morning presentation. For those who have been able to download our weekly recommendation, you also see more buy recommendation. But the purpose of this morning capacity webinar or a section, we are pushing this thing forward that you can, those who have not been able to check the entire recommendation, at least you can pick buy from this. While in terms of the wood, 25 to 31, we're also pushing MRS, NACO, Okomo, Presco, Stanbic, Unilever, and the Wemaba. We are also placing them on hold. For those who also want to take advantage of the high prices in the market, you want to cash out your gain, and this is the time for you to be able to sell your African Prudential, Fitson, Lasaco, USA, and then Transcorp Hotel, and then Sterling Bank Financial Services. There are others you will also see it in the recommendation. And then in terms of a dividend payment tracker, these are the we always continue to also put this thing forward for our need the investor to be able to track their dividends and to know the concerned registrar for Marshall Insurance. Their payment date is 10th of July. I think that will be this week. If on the payment date, if you haven't gotten your own, please reach out to our customer service. We'll do the needful to ensure that you receive your dividend. For Sterling Bank, it's a place registrar, and the 11th, they're also paying on 11th. Boa Cement, African Prudential, they are paying on 21. E-Transat, they are paying on 24. It's Meristem. Cornerstone is Lighthouse. They are also paying on 29. Fitson on 1st of August. Ikeja Hotel, they are paid on 1st of August, and it's also Meristem. So you can make use of this dividend payment tracker to track your bank account. If you have holdings in any of these seekers, and you haven't received dividends on this stipulated date, please get across to us so that I'll be able to extract it for you. It's just in terms of expectations for the market, a lot is happening. We saw a company called Notoro Chemical. They also delisted, compulsory delisting from the NGS last week. It's happening sometimes. Company can also file for voluntary delisting. That happens to that company. We haven't actually seen liquidity around that company. So for those who have investments, who have stake in this company, you are likely to be credited by the data mass registrar. If you have mandated your account, it will be credited. I think it's 62 naira 50 kobo for the delisting payoff. So if you haven't gotten it, you have stake, also reach out to our customer service so that we can do the needful and ensure also extract that for you. And also last week, we saw buy interest outweigh sell interest, primarily driven by the investor confidence and continue to search for value. You see that investor will continue to search for value because I said earlier, the key macroeconomic variables are now favoring the equities market. We could see moderation in foreign exchange markets. So there are so many factors within the economic space that really driving equities market. It's not by speculation. It's not about thinking of what happened in 2020, 2008, when a lot of people also believe that since market has gained on 6 week consecutive times, is there any possibility for the market to crash? This is not the market to crash. Companies are posting good results, and the companies that are also posting good results will continue to see give values to those who are also invested in such companies. So for those who have not been taking position in some of the highly recommended stock in our recommendation, we also encourage you to continue to do that. You have to continue investing on continuous basis because these companies will continue to increase in value. We've seen where Presto is coming from. We've seen some of the other tickers where they're also coming from. As long as they will continue to post good results for the market, you see they will be well compensated. Another good news also in the market, we have seen the likes of a GTB now going to the London Stock Exchange to go and be listed. So for those who have been following up our recommendation for a very long time, we've been placing GTB in our recommendation. This is also very good. The likes of Seplat is also part of our recommendation, it's also listed in London Stock Exchange. Airtel Africa is also listed in London Stock Exchange. We are not reacting to the news. This is something we have been doing over and over. So we don't just react to the news. We had already projected that a lot is going to happen to some of those companies we are recommending, that we encourage all our lead investors to take advantage. So this is also the time for companies to start dishing out their F-share performance. And I will believe that we are likely to see a lot of portfolio rebalancing within the markets. A lot of people who also want to take position in fundamentally sound companies so that they want to grow their portfolio. And those companies that are also presenting appealing entry price, you also see a lot of people taking more position. So our prediction or expectation for this week is that a market is likely to close sideways. Market is likely to witness some profit taking. People will react to the deadline being given by President Trump on the trade tariff. Is also need to monitor what is also happening in global space. I think it's 9th of July. So you are likely to see a cautious approach around the equities markets. A lot of people also want to see the reaction. So this week, Capital will predict and expect market to also trade on sideways. Bull and bear, they also have both market to contest for within the week. So you are likely to say that the bulls and the bear will contest for the market. It may close lower, it may close higher. But in our recommendation, we believe that it's going to go on sideways. We'll continue to also bring the key proven investing principle to all our customers to guide you. We'll continue to encourage you to invest regularly. That's the best way to earn value for your investment. Also, we will continue to encourage you to ignore noise. We saw what happened 3 weeks ago when the bank result came out from the central bank that commercial banks should not pay dividends. A lot of people sold their stock, but thanks to all these capital investors, you listen to our recommendation. We saw how that thing also turned out to be very good for those who didn't take action by selling up their portfolio. Also, we encourage you to also monitor your investment and reach out to us for appropriate advice. Also, rebalance your portfolio at every point in time. Sell out companies that are not really doing well, and ensure your investments, your portfolio, commodity valued companies. Also, consider dollar profit, our dollar cost average. Anytime there's a little drop in the market, and those stock you have bought higher, try and buy more to reduce your average cost of holding. It encourages and it helps you to be able to get more value for your investment, and also determine your profile for you to be able to take advantage of all our mutual funds. So don't only expose yourself to the equities market alone. And then we also encourage you to diversify your investment in key sectors and also consider all lead capital mutual funds. I think we have come to the end of the equities market presentation. So this is the time for question and answer. Thank you. Good morning, everyone. So you can make use of the chat box for your question. What is the implication of GTB conversion of GDR shares and a listing on London Stock Exchange? What they are going to do, they are likely to cancel, as I've said, the bank is going to cancel the GDR before the listing. When they listed the GDR in the London Stock Exchange, Nigerians who are actually invested in GDR, they are doing a ratio of 1 to every 50, meaning that if you're holding 1 unit of GDR, you're also entitled to 50 units of GTB. So with cancellation of the GDR now, so it means you are going to convert that to your GTB shares. And then when the stock is listed in the London Stock Exchange, you are going to get the same value of GTB shares in GDR. But GDR ceases to exist immediately the GTB is listed in the London Stock Exchange. And how will the stock likely perform locally? It will not affect the local performance. It will create more liquidity. And we have seen what actually happened to the Seplat Energy PLC. It's listed in London Stock Exchange. It's also listed in Nigeria. It will create liquidity for the company. And then it means that this is the time for local investors to take advantage of the current market price, because you and local investors, international investors are now competing for that same stock, because they have created a platform for those local investors and international investors to be able to invest in such company. So we encourage you, GTB is part of our buy recommendation. Please don't be left out. Take advantage of the current market price. Why will I be not been able to restore lead capital WhatsApp platform in spite of the promise? Mr. Adegbero, this is noted. Your account officer is going to reach out to you. Thank you for that complaint. It has been taken. We've taken note of that. After this meeting, the program, your account officer is going to reach out to you and resolve that. Has Stanbic IBTC completed the allocation to the right issue? Yes, they have completed the right issue, the allocation, but our interaction with the first registrar, which is registrar, I think some are still pending. But for those whose accounts have not been credited, please let us know so that we can resolve that. But we can assure you that almost 70-75% of those who subscribe to the Stanbic IBTC through Lead Capital, their accounts have been credited. Somebody is asking, what is your take on Niemed Pharmaceutical Oat? If you check our recommendation this week, we also place it on buy. So you can invest in, no, sorry. Niemed Pharmaceutical currently is not under the capital recommendation. We haven't covered it. So we have to do more analysis. It's under review. But if you want to invest in healthcare, and you can buy May & Baker, you can also buy Mikio. 2 weeks ago, we placed Mikio Industry under review. Well, we have been able to do more review. It now form part of our buy recommendation. For Niemed Pharmaceutical, we have not reviewed it. So we are not recommending it for now. Julius Baja, it's not our recommendation for now. We have not covered it. You cannot cover all the equities in the market, but what we have covered about almost 59. If you are interested in investing in construction or real estate, you see the UPDC, and then in construction and cement, you see the likes of Lafarge, Bois Cement, and then Dangote Cement. But Julius Baja is not part of our recommendation now. But we have also noted that you can see we are expanding the coverage gradually. What is the update on Fidelity? Mr. Aweke, please, this is also noted. Fidelity Bank, they have also credited people, but there are some issues we've been having the first registrar, but all the lists we forwarded to them, I think they have been resolving it gradually. Please, this is also noted, sir. We will check and give you the updates. Trader is unstable. It's recent time. What are you doing to ensure? Okay, thank you for bringing it to our attention. In the next few weeks, you are likely to see new version of the trader. But it's not somebody is saying it's very unstable. I think you also have to check your internet as well. Because that is also very important. You know, when you are also trading on the equities markets, the application also require a stronger data and a stronger internet facilities for you to be able to drive it. But in terms of very unstable, please check your internet. But we are also making effort to ensure that we also upgrade and upscale our day trader in such a way that it's more efficient and robust as one of the best applications within the industry. Thank you. Okay. I think in the absence of further questions and comments, we would like to bring this program to an end. We extend our heartfelt thank you to all our valued customers this morning who have joined this program. So we thank you once again. We wish you a successful week ahead. So thank you. Good morning all.